Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, October 7th, 2010. Well, folks, a wild day on Wall Street. Volume is very, very light as we await the jobs report, but that did not mean that intraday the market would not swing up, down, left, right, and every which way. Why? Because of the dollar. It is simply put, the dollar is going crazy today. We saw the dollar initially gapping lower, and that created a gap up in the markets. You can see it right here, folks. A very nice gap up in the markets up to this yellow trend line. I will show you where that trend line comes from in a minute. But what did we see next? We saw the dollar catching a big bid, and the dollar started to race higher and continued higher all the way to about 12:30 p.m. Eastern Time. The market, again, fell all the way down into that exact time frame. Since then, the dollar has started to come back in, and the markets have started to get a little bit of a bounce. We are still negative on the markets today as you look at the SPY, but overall, you're basically just slightly negative or on the flat line. In fact, the NASDAQ is bucking the trend today, trading to the upside. The NASDAQ's up 4 points, while the Dow is down 12, and the S&P 500 is down 2 points. So again, folks, you can see a nice recovery on the markets here. Unbelievably light volume as everyone is now looking towards the key data tomorrow, non-farm payrolls, and the unemployment report. By the way, folks, for those of you that are Research Center members, there will be a no hype live broadcast on the numbers as we watch the charts react, analyze the numbers, give you the plays for the rest of the day included. And again, that's inside the Research Center along with everything else for $49.99 a month. All right, now, what do I want to discuss here, folks? First off, the gap up. I told you I'd show you where that line came from. Take a look at this. This is how much I love chart and trend line analysis. If you take the pivot high from right going back to the 21st of September, connect it to the pivot high on the 30th, and connect it to a couple days ago on the 5th right here, or the 6th to make that, the high pivot on the 6th, the 5th and the 6th right up here. Connect all those lines together, and you get the exact gap up on the markets today. How crazy is that? I mean, we talk about how key trend line analysis is, and that's a perfect example of it, folks. I can't stress that enough. A perfect example of trend line analysis, how it works. Now, as soon as we gapped up there, folks, as I zoom back in, the market started to sell off. We came all the way back in again. Why? Because the dollar started to rally. Now, this is a very rare occurrence because, in all fairness, if you take a look at the dollar on the daily chart, which I'll put up right now, let's go to the daily chart, you can see we've been in free fall. I mean, the dollar has literally been falling off the cliff, not only from really going all the way back to June, but even more recently off of the bear flag. That's a perfect bear flag right there. And again, the bear flag playing out to the downside. Today's the first sign that the dollar might be at a short-term or near-term little area of support. All right, and again, good reversal today. We have to see follow through tomorrow, though. And again, tomorrow, the big non-farm payrolls and jobs report. Now, with the dollar reversing, stocks and commodities that were extremely overbought are coming in. Take a look at gold today. Gold dropping precipitously down $1.20 right now on the GLD. But if you go to your intraday chart here, you can see you actually bottomed right on the 200 moving average right here at around 129.65, 129.50 area. And then you got your bounce. So again, notice where the bounce is coming in here. Right at the 200 moving average. Beautiful little sign right there. And again, that is key, folks. Again, look at the bounce you get out of that if you had played the long play at the 200 moving average. And again, gold is off the lows as the market is off the lows as well. In addition, folks, oil. Oil getting hit today down about 70 cents on the USO. Beautiful little drop today, and again, we'll continue to watch this as oil, if you go to your daily chart, you can see it gapped up right into this 200 moving average. Let me erase a couple of these lines we have on the charts. You can clearly see the 200 moving average right there, and look at the drop you've had today. A gap up and a crap out. That's what it's called, a gap and crap, essentially. And that tells us that, again, in the short term, you're going to have some resistance up in that range, and you could have a little bit of a stall out. All right, next what we're going to do is we're going to go back to the SPY, talk about the intraday moves. So again, what drove the market today? What drove the market to reverse the early gains? Simply put, it was the dollar. It has been the dollar for months, if not years, folks. Understand that. It is so important to understand. And again, the gap up right into that level, the pullback, you dropped right into this green trend line. Now, where does this green trend line come? For those of you that are Research Center members, you remember the line comes all the way back from this pivot. We broke through, we gapped above it, we hit it, and continued to make a little bear flag here. You gapped up, hit it again, and then finally broke through today to the downside. Where is going to be your resistance today? Where on the retrace would be your resistance? If you get up to that green line, that's going to be your resistance on the charts. All right? Very, very important to understand that, folks. I can't stress that enough. All right. Now, we are having a little bit of a pullback here after a pretty good move off the lows. The dollar could be the culprit. Let's take a look. Dollar is trading right here, but it looks like the dollar is starting to get a small little bounce here. And if you bounce up a little, that would be the reason why the markets stall out on their rally into the afternoon session. My analysis this morning to the chat room was expect a flat market. What do we have? Now, granted, we were gapped up, and even when we gapped up, I still said it. And then when we were negative, I said it as well. And we are basically back to the flat line after recovering. And again, the reason for this is because you're now looking at a market that's looking towards the non-farm payroll number, folks, and that's what it comes down to. All right? So keep that in mind for now, and we'll continue to update you as things progress. All right, what else do we have here, folks? Next up, what we have is some charts on. We'll talk a little bit about the dollar here. We talked about that. You can see, again, kind of coming off, and that's what kept the market up. But let's go to Goldman Sachs. Goldman Sachs up 50 cents. Goldman had a nice fall, went negative, but has recovered to go positive. Chevron is on the weaker side today, but again, that is off the lows. Every stock out there is floating up. It's just the natural occurrence at this point in time. ExxonMobil down just 9 cents. You can see that's been carrying the markets up as well. JP Morgan is negative as well today. That is down about 32 cents. But even that, look at that perfect little kiss of the 200 right down here and a bounce off of it. Now again, you have to be looking very closely at the charts. I'm going to spend a lot of time in the nightly video tonight going over what exactly is going on here, because you have to keep in mind that the dollar reversal today off the gap down and the reversal on gold off the gap up and oil, that could be statistically key and be telling us something about the coming days, but we need to, again, analyze it a little bit more. So stay tuned, folks. Again, join that research center. A No Hype Live broadcast tomorrow morning at 8:20 in the morning, 8:20 a.m., and then obviously we'll go right into the chat room. We've got to be in tune with the hot charts and alerts, Pro Trader Watch List, Daily Market Report, nightly video. All of that's included, and we're going to be discussing these key factors. You want to get involved now, because this could be the prominent time to be ready to position yourself in the right direction for a market move in the coming days. We'll talk about it more tonight. I'll talk to you later, guys. Take care.